Iron Butterfly tutorial with Market Chameleon. This is what we're gonna do today with a twist. We're gonna short the at the money strike and we're gonna long the out of the money strike, but the twist will be that we're gonna use by theoretical edge. We're gonna screen by theoretical edge, meaning the income that we collect, if we are right, is much more higher than what we should have collected based on history or based on random walk down YouTube or Robinhood looking to sell Iron Butterfly. So let's get started. A lot of you are asking, in general also a lot of you want to know about Butterfly. What is it? You heard that, hey, you can make a lot of money risking a lot less and all that stuff. So just so you know, Iron Butterfly, let's start with the basic. The basic says the stock price stays near current price. This is your goal. The outlook, when you do a debit call Butterfly, Iron Butterfly, when you buy out of the money and you sell in the money, you sell two in the money. We're gonna read exactly what it is. Your goal is for the stock or the index, ETF, whatever you use, to not move. The more it stays the same, the more your income will increase and you collect more money. There's a lot of variation for the Butterfly. We're gonna focus on the ones that can generate us the most income based on history, the edge. So before we read about it, okay, and do the filters, let's go read the disclaimer. And know that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purpose. And my name is Ziv, also known as Finance After 40. And if you're not a member just yet, 7 days trial for Market Chameleon, link below. Okay, so with that being said, let's read this and understand. I'll try to give you a simple example after this. But just so you know, what is an Iron Butterfly? It doesn't mean to sound so scary or complicated. It's basically a simple thing. Let's read. For this specific screener, to get to here, before we even read, you're gonna go to screeners right here once you're a member and pick the first one. Call Butterflies. Short at the money, long out of the money. That's the basic one. This is the one that I used a couple of times on Netflix, but I did it randomly. I haven't used Market Chameleon Edge, which we're doing today. So yeah, it wasn't that good. But with the Edge, I can make more and risking less. So let's see what we got. Debit call Butterfly spreads involve buying. Okay, you buy out of the money call and also you buy in the money call and you sell two at the money call. For the same expiration, particularly underlying stock, the strategy requires net outlay of premium at the time of the day. So basically a debit. Okay, but a small debit because you sell two. I'll explain in a second how exactly all this works. The goal for this strategy would be for the stock price to remain close to the current spot price, for the stock not to move. The maximum gain is achieved when the stock price at expiration is right at the strike price of the two short at the money calls, the two that you sold. I'll use the filters below, which we'll do now. So let me tell you an example instead of reading it to make life a lot easier. Let's say the stock is at $100. Okay, I'm gonna go slowly because Butterfly is a concept, is a trading option strategy that not a lot of people use. But it's good in some cases, and it's good to know what it is, and it's good to add to your arsenal. So let's say the stock is trading at $100. Random stock, ABC, XYZ, doesn't matter. Stock traded $100. You can do Iron Butterfly, debit call Butterfly. You buy, okay? This is what you do. You buy, for example, 95 call, okay? You buy the 95 call. And you also buy the 105 call. Okay, now the price is 100. We're not done. Price is 100. You buy 95 call and you buy the 105 call. So you buy one that's already in the money because the price is 100. You bought the 95 and you bought out of the money the 105. Now this price at 100. Now you're paying for those two calls, which is expensive. So to lower the price, because you don't want to buy just random two calls and one of them is in the money, it's going to be expensive. to mitigate that amount of money that you pay for the butterfly, you're gonna sell the $100 call as well, okay? But you're gonna do it twice. That's the key. So let's say for the example, the 95 call cost, I don't know, $200 because it's in the money. Or it's more, it's like $600 with time decay, because there's $5 intrinsic value plus time. Let's say it's worth $600, and the 105 is worth a lot less because it's out of the money. So let's say, I don't know, 300 for the example. Okay, just because there's time premium and implied volatility. So one is worth 6, one is worth 3. You buy the 95 call, you buy the 105 call. That's $900 out of the bet. But you're selling the 100 call. You sell the 100 call, let's say, because it's in the money and there's time decay. Each one is $2, something like that. Then you sell 2. That's $400 back to your account. So this whole butterfly cost you $900, okay, minus the $400 that you just collected, $500. So because you sold 2 at $500, at $400, your total for the butterfly is 300 plus 900, which is 300 plus 600 is 900, minus 400, $500 debit. Now what we're doing, we are looking for a stock, all the stocks that give us an edge. I'm gonna show you the filter in a second, what I've done here. But basically, we are trying to make sure the stock stays the same. The more the stock stays the same, the more income you will get, because your goal is as follows. Your goal is that the 100 call will not go anywhere. Okay, the 105 goal. Let me show you. Let me show you to make life a lot more easier. IF filter. This is what we got. You get a blank page of filters. IF filter for expiration in the next 7 days. Why? Because I don't want the stock to wait a month for, and in a month a lot can happen. In 6, yes, you will probably get more, but I want time decay and I want it as fast as possible. I want to know if I put the butterfly now, the stock will not move and everything is good and I will collect as much income as possible. Now, will it happen? I don't know. But can you close the trade close to where it is, where you sold it to? That's a possibility. So I haven't done anything in here. I just changed the expiration to the next 7 days. But let me show you what we got. We got all this. We got 50 pages. I don't want to go over 50 pages of results. So I filter, this is the key, I filter by theoretical edge. Theoretical edge is where we are now. Okay, we got also win rate, which you can filter. We got the expiration right here, and we got, look at this, max gain, percentage of max gain, 170%, 600, 435, 385, crazy percentage, because if the stock stays the same and it doesn't have a lot, it has October 4th, which is a few days from now, it's probably Friday, 2 days, 2 trading days. If nothing happens, the stock is the same as it is now, you collect the max amount. Don't count on that. It's very, very, very rare that the stock ends where you sold the 2 calls. So your aim is to collect hopefully more than what you paid as debit. So let's see stuff that, as I said, stuff that you know, stuff that doesn't move a lot, and maybe an index. So Humana, they are down 20% today for some news. I'm not touching that. I'm not touching that, but we got SPY. Let's see SPY right now, okay? And then let's see what we got. And it will tell you exactly the trade opportunities. So the price, 568.63. Give or take, doesn't move too much today with everything that happened. Market cap, okay, and it tells you, we're gonna go over this in a second, but it tells you the trade itself. It tells you sell 2 times at the money strike 569, okay? For October 4th, it tells you sell 2 569 calls, and then it tells you buy the low strike 566. It tells you buy the 566. and tell you buy the high strike 572. Okay, and your goal is for SPY, of course we don't control it, but your goal for SPY to stay at 569. That's your max profit. Your max profit, and you see here your max gain, if it does happen, is you collect $260. But look at this, your max loss $39, $40. That is it. $40 you're risking for a goal to make 260. Your max gain in this case 669.2%, which is insane if SPY stays and closes at 569 by October 4th. It will not, but you know, it could happen. I'm not saying no, but the odds are like less than 1%. So your goal, if you your debit is $40, and let me show you why. Your debit in here is $39 compared to $55. That's the key here. 41.2% edge. Yes, your win rate is low, but if you do win, that's like 7 times your money. So give or take, everything can happen. Okay, that's the key. So that's one trade idea opportunity. Let's try another one. Okay, and you see here all those for 40%, 40. You're not gonna see like 95% 5 delta win rate. You will see 40-50% win rate, but when you win is 6 times more, 4 times more, 4 times more, 2.7, 5x, 3x. This is a SPY, 10 times your money, 952%. I'm gonna look at this as well in a second. Okay, and it also tells you what your max loss, $19. Your max gain 180. That's like 9x. Yeah. If this, you know what? Let's go over this trade because this is interesting. This is a 952% max gain. Max gain happens if by expiration on October 1st the SPY lands at 569. Okay. But you buy the 567 call, and then you also buy the 571 call, so 2 in this side, 2 in this side, and you sell twice the 569 call. $20, $19, and if SPY ends at 569, doesn't move anywhere, yeah, you win. When do you lose? Your max loss if SPY goes below 567, or if SPY goes above 571. Now, yes, you got almost 10 times more chance to win, but you see your win rate is 22%. That's something to consider. So if you want to go instead of theoretical edge, and by theoretical edge I mean here you're paying for the debit $19 compared to 26, that is it, which is pretty good. But if you want to go by win rate, if you want to stay more conservative, basically for this butterfly, you can filter by win rate percentage and look for stuff that you know. Now, stuff that you know, the higher the win rate will cost more, and you will make less theoretically. So if I scroll quickly in here, I see the Russell 217.22 IWM. Okay. And let's see what we got. So the price 217.22, and it tells you, look at this, it tells you to buy the 210 and also buy the 224 calls, both everything is calls, but sell twice the 217. So your goal is for the Russell to stay at 217, and your max gain is 395, but your max loss is 300 if it breaks 224 or to the upside, or 210 to the downside. So that's something to consider. You can go and filter by, so again, the more the winning rate, the higher the winning rate, the more you're gonna pay for this opportunity. So if you filter by percentage max gain, you get yourself 1,000%, 10x your money on the SPY, on the QQQ, and you can filter all of this and go by them. Here you don't have a lot of edge, so something, a lot of things to consider. This video is getting long, but either way, you can use Market Chameleon to search for Iron Butterfly. We're gonna do a few more videos about that, Hope this was valuable. I'll see you on the next one.